I want to begin with something that unfolded on March 14, 2026, an event that barely received the level of attention it deserved in Western financial media. Iran made a very specific announcement. Oil tankers could still pass through the Strait of Hormuz, the narrow corridor responsible for nearly 20% of global oil flow every single day. But there was a condition. Payment had to be made in Chinese yuan, not dollars. Take a moment to think about that. For over 5 decades, the Strait of Hormuz has been one of the physical anchors of the global dollar system. Since the 1970s, oil moving through that route has been priced almost exclusively in US dollars. That pricing structure isn't just tradition. It's the core engine that sustains global demand for the dollar. Countries don't just want dollars. They need them because oil requires them. And that demand is a major reason the United States has been able to sustain over $36 trillion in debt while still maintaining global confidence in its currency. But on March 14, 2026, that mechanism was directly challenged. I've spent decades studying how reserve currencies rise, dominate, and eventually weaken. And I can tell you this clearly. What's happening right now is not just about conflict in the Middle East. This is about the structure of the global monetary system. And it may shape the next decade more than most people realize. By the end of this video, you'll understand how the petrodollar system actually works, why it matters to your daily life, and why this shift toward yuan-based oil trade could have long-term consequences for your savings, investments, and purchasing power. You'll also see what major Gulf nations are quietly reconsidering right now, and the 2 possible paths the global economy could take from here. Let's start at the foundation. Because if you don't understand how the system was built, you won't understand why it's under pressure today. In 1971, the United States made a historic move. President Richard Nixon ended the dollar's convertibility into gold. Before that, the dollar was tied to a physical asset. In theory, you could exchange dollars for gold. After August 1971, that link was gone. The dollar became a fiat currency, its value based purely on trust and government backing. That created an immediate question. Why would the rest of the world continue holding dollars? The answer came in 1974. The US reached a strategic agreement with Saudi Arabia. In exchange for military protection and security guarantees, Saudi Arabia agreed to price all its oil exports exclusively in US dollars and reinvest surplus revenues into US government debt. Other oil-producing nations followed. And just like that, the petrodollar system was born. Here's why that mattered. Oil is essential. Every economy depends on it. And if oil is priced in dollars, then every country needs dollars. That constant demand created a unique advantage for the United States. It allowed lower borrowing costs, persistent trade deficits without currency collapse, and the ability to use financial systems as a geopolitical tool. This became known as America's exorbitant privilege. But that privilege depends on one assumption. Oil continues to be traded in dollars. Now fast forward to 2026. That assumption is being tested. Let me break down what actually happened. The regional conflict began in late February. Within days, the Strait of Hormuz became extremely risky for commercial shipping. Insurance premiums skyrocketed, jumping from near zero to levels that made transit economically unviable for many operators. As a result, traffic through the strait dropped sharply, especially for Western-linked vessels. Then came Iran's announcement. Passage was allowed, but only if oil cargo was settled in yuan. This is critical. Iran wasn't just making a political statement. It was using control over a key global choke point to enforce a currency shift. Every shipment settled in yuan instead of dollars reduces global reliance on the dollar. That means fewer countries need to hold large dollar reserves. It also means reduced demand for US Treasury bonds, the backbone of U.S. debt financing. And this is what makes the situation unique. Previous challenges to dollar dominance were mostly theoretical, discussions, proposals, or long-term ambitions. This is different. This is physical leverage being used to drive financial change in real time. Reports showed that tankers from countries like China and India were still moving through the strait under negotiated terms. Meanwhile, vessels linked to Western nations faced restrictions. In effect, parts of the Strait of Hormuz began functioning as a Yuan-based trading zone. At the same time, Gulf nations, especially Saudi Arabia, found themselves in a difficult position. Their infrastructure was being impacted by regional instability tied to broader geopolitical alignments. And behind the scenes, something else was happening. Major Gulf economies began reviewing long-term agreements with the United States, including investment commitments worth hundreds of billions of dollars. That matters, because these countries were central to building the petrodollar system in the first place. If they begin stepping back, even gradually, the system weakens. And here's another key detail. Saudi Arabia had already started diversifying away from exclusive dollar reliance before this conflict began. It had developed mechanisms for settling trade in other currencies, including partnerships and financial infrastructure tied to China. Digital payment systems that bypass traditional Western financial networks have also been growing rapidly. In other words, the groundwork for a more multipolar currency system was already being built. This conflict didn't create that shift. It accelerated it. Now let's be clear about something important. This does not mean the dollar is about to collapse overnight. The dollar still dominates global finance. It benefits from deep markets, legal stability, and widespread trust. The yuan is not yet capable of fully replacing it. But that's not what's happening. What we're seeing is gradual erosion, not sudden replacement. The dollar's share of global reserves has already been declining over the past 2 decades. What's happening now is speeding up that trend. So what happens next? I see 2 main scenarios. In the first, the conflict stabilizes relatively quickly. Oil flows normalize, and dollar-based trade resumes. But even then, the system doesn't go back to how it was. Trust has been shaken. Alternatives have been tested. And diversification continues. In the second scenario, disruptions persist. Yuan-based settlement becomes more common in regional trade. If that happens, demand for dollars could weaken more significantly. That would have consequences for interest rates, government borrowing, and asset prices globally. So what does this mean for you? The key insight is this. Reserve currency transitions are not sudden events. They are long processes. And we are already in one. This doesn't mean abandoning dollar assets entirely. But it does mean recognizing that relying on a single currency carries increasing risk. Assets like gold, real assets, and diversified holdings become more relevant in this kind of environment. Central banks have already been adjusting. Many have increased gold reserves significantly in recent years. They're not reacting emotionally. They are preparing structurally. And that's the difference. To close this out, understand the bigger picture. The petrodollar system was built on 3 pillars: stable energy supply, dollar-based trade, and U.S. security guarantees. Today, all 3 are under pressure at the same time. What happened in March 2026 may not mark the end of the system, but it could be remembered as the moment its vulnerabilities became impossible to ignore. These transitions don't happen in one dramatic collapse. They happen through a series of events, each one manageable on its own, but collectively transformative. History has shown this pattern before, and we may be watching it unfold again. Pay attention to the mechanism, because once you understand that, you'll understand where things are heading, and more importantly, how to prepare for it.